Kulsoom Lakhani, how are you today?
Doing great.
So, you've been here for a while. You've been investing in this space for a while. You've been in Pakistan, even though you live in DC, and you have been covering all types of startups. You've raised a fund. You're now raising a second fund in an environment where the startup ecosystem seems broken. What's broken about this ecosystem?
I think broken is a really interesting word. I wouldn't say that we're broken. I think there are things that are very not wrong, but I think there are things that could be fixed, right? So I think in every element, and I think if you think about what a startup ecosystem is, what is an ecosystem, right? So even when you think about it in nature, an ecosystem has all these different levers that allow something to thrive. Mm-hmm. And so if we're working backwards from the notion, is a startup ecosystem thriving? No. And when you work backwards from that, it's because all the different levers, there's things that can be fixed and maybe improved on, right? So whether it's the support space, the incubation programs, the acceleration programs, there's a lot more of them today than there was, when I started, my original organization, Invest to Innovate, which is an ecosystem builder, that was in 2011. Back then there was nothing, right? So the fact that there's so much happening, the national incubation centers, all of that is great, but there needs to be more connectivity of startups that are coming out of these programs. Are they actually investment ready in order to raise capital from investors? From an investor standpoint, we had a lot of investors that were investing in Pakistan in 2021, 2022, in that hype cycle. A lot of that money is gone now. A lot of it's dried up. And it's made it difficult for even the investors like us that are Pakistan focused to raise our funds, right? So there's a lot that's it's broken in that the capital that should be there to support these companies has been drying up and decreasing, right? And then even from a standpoint of once those companies raise funding in the venture cycle, you have to keep raising money, right? So it's not just raising early stages, but going on to raise a Series A, Series B. And in Pakistan, there is not really Series A investors, or maybe there are Series A investors, but definitely no Series B. And then when you think about it, it's can you build if you have to go outside and raise money for those later stages of funding, being a Pakistan only company is really difficult. So then companies have to think about how they scale outside. So is the ecosystem broken? To me, there are things that I think are these different levers that can definitely be improved. We need more growth stage investors. We need debt capital, right? All these financial service companies, these fintechs that are growing, need balance sheet financing. And it's really difficult to find that from, access to credit, access to affordable debt is really difficult in Pakistan. Working capital is really hard for all these companies that are growing right now. And so there's a massive need for that. So I think there's a lot of gaps and a lot of things that can be improved.
So you've named a couple of things, right? From what I understand, there's a couple of things that are structurally challenging. Bringing money into the country and then being able to take the money out of the country, that's a challenge. Being able to get financing in this country for any startup, right? Whether it is through equity funding or debt funding, it's very difficult because there is no recourse for your funds. Because if someone runs away with your money, what are you going to do, right? At least,
you can do stuff.
Can you really recover the money?
You can, recovering is one thing, right? But when you sign a term sheet with a company and shareholders agreements, you put stuff in about how you protect, your investor rights, how you think about, how a founder can't walk away, right? All of these things that legally you can create for yourself. But when investors are signing safes, which is a simple agreement for future equity, you're not actually signing anything that's more than a promise for future equity in a company. So it really does boil down to who are you investing in? Does this founder have integrity? So yes, you have recourse if there's a legal agreement. If there is, a safe is obviously still a legal agreement, but it's not a proper shareholders agreement. Right. You're not buying shares in a company yet. That's really when you have to have a sense of does this founder have integrity? Is this someone I can trust? And think about how you mitigate risk from that standpoint.
You see, but the other thing is that there's a lot of risk coming into Pakistan, right?
Of course.
And like you said, you don't get rewarded for being a Pakistan only play. In fact, even Pakistani founders look for plays in Pakistan that will lead them to plays outside Pakistan, right? Because the value doesn't exist here. The unit economics don't make sense from a revenue perspective, right?
Sure, from a revenue perspective.
So in that environment, do you think Pakistan is only a great market when money globally is cheap? Because that's what we saw in 21. Money was super cheap globally. There was there was a flood of funds and liquidity. And as soon as the liquidity dried up, interest rates went up overseas. I mean, you saw what happened to the ecosystem here. It completely decimated, dried up. People didn't have funds here. So is Pakistan a play only when you have extra cash lying around in the rest of the world? Because there's so much risk?
I mean, that's a really good question. And, just to invert what you said, right? Interest rates went up, and that's also what caused, and, obviously the Russian war in Ukraine, there was a lot of different things that happened that also led to interest rates. Like all of that stuff from a macro standpoint led to money drying up, right? Because before, when interest rates were down, it was the pandemic. So you had a lot of investors that were previously too scared to come to Pakistan to do diligence, all of a sudden could do deals on Zoom, right? But I think that Pakistan now is actually more interesting as a play than it was before, right? So what you said is true. The average order value for, if a user is buying something, like their baskets are much smaller because obviously with PKR versus dollars. So all of that is still the case, but in terms of like the addressable market. So a lot of these foreigners would look at Pakistan and they'd be like 250 million people, 2/3 under 30. We heard that same refrain over and over again. But the reality is the addressable market in Pakistan was quite small, right? Because in terms of purchasing power, in terms of GDP per capita, in terms of how many people were actually online, but also transacting online, right? So you might have had a phone, but you weren't using it to buy things. But with things now in Pakistan, with number one, the macro situation has gotten relatively better. Inflation has, at least stabilized. It's not going up the way that it was a few years ago. With people now going not only more online, but with things like Raast, which is our instant payment system, right? We've seen how in India, UPI literally changed how things were delivered, how people were then, transacting online and weren't just using cash. Same in Brazil with Pix, right? And so we're going to see that same type of, I think my belief is that we're going to start to see that happen more and more now in Pakistan. And I think that the addressable market as a result is getting larger. And so I think that Pakistan only as a play, as a company is growing I still think that we've barely scratched the surface of seeing Pakistan only plays really dominate the market. I think that you can build a company for Pakistan and still really build a robust company that makes money. And I think that to me should be attractive to investors. And I think that will increase over time. However, I do think that a lot of I have a company in my portfolio, Abhi, which is, a financial wellness platform, has earned wage access, SME financing, a whole gambit of different products. They recently acquired Finca in Pakistan, is now Abhi Bank. They really started in Pakistan, started building, and then they grew to the UAE and to Saudi, where there is a lot of capital as well. So that all of a sudden made them more attractive for raising their later rounds of funding. But Abhi Bank is actually doing really well here in Pakistan, right? In terms of being able to show that there is actually a massive market for what you're building for. So I actually think that we've barely scratched the surface of what is the potential here. And so I think in the future, a Pakistan only play could actually raise significant amounts of capital. But I think that we're kind of at that in-between place right now where you still kind of have to show that you need to kind of go to other markets and markets where investors find things attractive. And I think that's the challenge too, right? It's like the push and pull of like where it's not that, we're investors in DealCart, which is a grocery play, right? It's not a quick commerce play, but it's a grocery play for kind of more of an SECB style audience, right? Of like people that are price conscious. DealCart is a Pakistan only play. And they're actually right now a Karachi play. They will grow outside the market, but their numbers for just Karachi is massive, right? And so if you can really show that you can build, I think eventually like a DealCart, the way that City Mall in India has been able to show, actually there's a huge amount of potential here for what they're building.
As an investor, how do you account for the fact that probably 60%, if not more, of transactions are cash? and not digital payments. Because for the digital ecosystem to boom, you need to have frictionless movement of money and transactions. And to this day, because taxation is so high and it's even the taxation system is flawed and it needs help, and because that system is the way it is, most people prefer dealing in cash. Salaries are given in cash. Businesses are running two different books. Homes are run in cash. So how can you really build a true scalable startup in an environment that is built to handle friction?
I think every emerging market that has like, again, when their instant payment system goes live, and then also you have a government that starts incentivizing people to use cards over cash. And even right now with this, it's not even that people need to use cards. You can actually pay via QR code, right? So I think you're going to start seeing more people become part of the formal economy as a result. And that's like the desire here, right? Is like you want people as part of the formal tax net, formal economy, which again is its own beast in itself. But I do think that you are going to see a transition of more and more people going from cash to cashless. It's slow in Pakistan, but I do think things like Raast going live, you're going to see that effect happen. It's just going to take time, but I do think it's inevitable.
And if I had cash to invest in, if I wanted to pick a market that was high risk or pick an investment that was high risk, why wouldn't I invest in crypto instead of Pakistan?
I mean, crypto is super high risk, right? High risk, high reward, depending on what you're putting your money into.
But if Larry Fink in BlackRock has invested in Bitcoin and all of the big banks have finally converged and they've got an ETF and so on, why wouldn't I take that as a bet, right, for a risky asset that has a high reward than investing into a country like Pakistan where there's so much friction and actually I don't even know how this is going to play out.
Sure. And I think what I always say to people as someone who's been in many fundraising conversations over the years is that it doesn't have to be either or. It can be yes and, right? And actually with Pakistan, the risk is so high, but as a result, the potential reward can be so high, right? But because we haven't seen it play out yet, doesn't mean it won't play out, right?
Has there been a good, successful exit?
Not yet. I mean, we have had, like, when you think about, and they're exits that are like, we can talk about it as like we've seen in my hypothesis of, outside regional players wanting to acquire local players. We saw that with, ZooPay acquiring Days. Obviously, Papara is a bit of a tricky conversation, but there was that acquisition of SataPay from a Turkish player. We've seen a lot of outside players saying that Pakistan is a high friction market. Why not, instead of building ourselves, we come in and acquire a player, especially in the fintech space where licenses are very difficult, right? And it's a highly regulated industry. Why not acquire a local fintech and be able to work side by side? We've seen that and so we've seen that even locally with consolidation here. I think in terms of, when people are thinking outside into Pakistan, I think that when we think about exits, it's really hard because it's chicken before the egg, right? It's like, if there are no exits today, you have to put your money into startups and funds in order to see the exit happen, right? So it's really, you have to kind of sell and create imagination with people and capture their imagination, right? And you have to think about comparable markets. So Pakistan today isn't there, right? And there is a lot that is high friction. But when we think about, I've had my own podcast, The Comparable, over the last 6 months, where it's like really looking at the emerging market stories side by side, right? And what I think is really interesting, because every episode we look at like buy now, pay later, and we look at a play in Brazil and a play in Pakistan, and there's so much similarity. And so if you don't buy that Pakistan is there today, look at what's been happening in Brazil, which is actually one of the most exciting fintech sectors in the world today. If you're not buying what's happening in Pakistan today, look at what's happening in India, which is like 15 years ahead of where we are, right? Don't you want to get in now when things are relatively cheap, when the upside could be so much higher? So you have to, as an investor that's not only investing in Pakistan, I have to capture the imagination of other investors investing in us and also investing alongside us. You have to look at people that have that high risk appetite, that understand the emerging market risk because it's there, right? And also say that like, you can't just, and this happened a lot in 2021, in that whole height of everything, people were just throwing money at companies, right? And throwing money at founders and not actually saying, is this a founder that can build in Pakistan for the market realities of what's there? Is this someone that's going to literally go and sit with their customer base because that customer base is not the same socioeconomic bracket as them? Do they have what it takes to do that? Do they have the resilience to actually say, when chips are down, I'm going to keep building? And I think a lot of people, because it was so sexy and cool to be a founder back then, everyone was launching a startup. And I think that was where people were like, oh, we know this business because we've seen it work in X market. Let's just throw money at this founder because he's really great at speaking about what he's doing, versus actually saying, does this founder have that character to actually build properly? And I think that right now it's actually more of a time to build than ever before, right? Because the noise has kind of gone. And the people that have remained are the ones that know how to build companies.
How do you distinguish between a founder that only speaks versus a founder that does?
I mean, I would ask you that question back. Don't you know the difference? You can kind of tell people that have I saw this, I attended a virtual Y Combinator demo day because one of our founders was part of YC at the time. So I was, supporting them. My partner and I tuned into it. And one of the other Pakistani founders that was there was selling something. And he was like, and we have this license. And I'm immediately sitting in the audience being like, they don't have the license. I know this for a fact as a Pakistani investor. The amount of people that wrote checks into that company that didn't do their diligence, that didn't actually ask around and say, is this true? Is this guy a lot of hot air? People didn't do it. But for me, I was like, I can do it. And we know this about Pakistan, right? Most emerging markets are like this. We're a severely relational society. I can make one phone call and find out everything I need to know about another founder in the market. I can find out about their character or their integrity. I can see how they actually operate. Do they do what they say they're going to do? Which also is why we invest at seed stage more than we invest at pre-seed, because it gives a little bit of time for us to see, is this person actually for real? How do they operate when things are really hard? And so you can see those things. I really don't like people that talk a lot. I love people that just do things, right? And so when I see people that are really just at these competitions, that are at these stages, and then I'm like, if you're at all these stages, when are you working on your business? Yeah, and I really dislike that. It actually bothers me even when I see a deck. And I've said this to founders that I've advised. I'm like, please don't put in as traction in your deck the awards that you won. To me, that's not traction. Tell me how much money you've made. Tell me how many people are buying your product. Those are the things that matter, not the accolades, right? And I think that's when, a lot of these founders were getting some of these things mixed up in the whole glamour and glitz of all this money flowing in and all these stages that they could be at and these fellowships that they could win. At the end of the day, to me, it matters, can you build a business?
So the question then arises, right? You said you want to see someone who does what they say. You want to see someone who has resilience, can sit with the customer, whatever type of customer it is. A lot of these traits can only be established and understood if someone has done this for 5-7 years, because you need that level of time for there to be consistency. I can do something for 2 years, burn out, and then I'm back off, right?
Yeah.
But only time, let's say a 10-year stint of me continuously going at it will demonstrate to you that I have the resilience to weather a down cycle like 2022, 23, to weather uncertainty like COVID, to weather, let's say, the political uncertainty of 2013 in a market like Pakistan, right? So why would anyone invest in a founder who's in their 20s? You should invest in founders who are at least in their late 30s or 40s, because they've been through the rigmarole of living in an unpredictable economy like Pakistan.
Yeah.
So why are the founders chasing these young guys? Because they've not earned their stripes.
Why are the investors chasing them?
Sorry, why are the investors chasing the young founders when you yourself said that you need to see consistency, resilience, do over speak, but only time demonstrates that. And time, to me, in building a business, 10 years is nothing. It's actually nothing.
Yeah.
Because
I've been doing this for 14 years, right? It takes time to actually figure things out yourself. And I've only been investing for 6 years, but I want to be mindful how I answer that question, because I don't want this to be something that makes it seem like we shouldn't invest in young people, because I actually think that really is the potential of this country. And I have invested in founders that were sub 30 years old, and actually you can see resilience. That's the thing. It's if I'm only going to wait for you to show me resilience, I actually think that that's not always the most optimistic way to behave as an investor, right? But sometimes you can just demonstrate resilience in how you've lived your life. Like a lot of these guys that are coming from, some of our founders, you have founders in Pakistan that have had the privilege, and entrepreneurship is privilege to begin with, right? You have the ability to say, I'm not going to go work and earn a living. I'm going to take everything and put it into this, right? And have a safety net. I mean, there is privilege there, but a lot of founders had the privilege to go abroad and like have this really fancy degree, and have the network and, work at Green and whatever. Some of our founders literally are, have only gone to, and there's not one that's better than the other, but like, I actually think there's something to be said of founders that have really kind of been from Pakistan in terms of being indigenously raised and built here. And like, I think Karachi founders, I'm not downing Lahore or Islamabad or anything because we have found all of those founders in our portfolio, but living in Karachi is like, that's resilience, right? Like that's why there's like this sense of like hustle and DNA in this culture here. And you can demonstrate that in how you've lived your life. And also I think you can take bets on people and you may not know. That's the thing with venture, right? There's a power law here that 9 out of 10 might fail, but that one that does really well does really, really well. In our portfolio, our median age is probably in their 30s, right? So we do have a sense of maturity amongst our founders. A lot of our founders worked at Green before, we're at FMCGs, had that experience. But we also have younger founders in our portfolio. And, one of them, this team of people that are really Karachi born and bred, I've known them for 12 years. And these guys, like I've known them when I started building our accelerator program. I met them 12 years ago and they were hustlers back then. They were like in their early 20s, from Karachi. They had this like really cool comic book called Kachi Golia, which was about Liari, like based like comic book. And then they someone else built another company and someone else did something else. And then this is like the third iteration of whatever when we eventually did meet them and invest in them. But they're still young. But we invested because I've seen that over time, right? But to your point, like sometimes it takes time to see that and it makes you feel comfortable as an investor. But I think at the end of the day, this is the riskiest asset class, right? So you have to take bets on people and know that, some of them are going to fail. Some of them may not have like that ability to still build when things are hard, but you start to see like a sense of like pattern recognition as an investor. And for me, because I, ran an accelerator for so long, I've seen hundreds of founders over the years. And now as an investor, I've looked at so many different deals. We have 13 active companies right now in our portfolio. We did a what's it called? Personality diagnostic of all of our founders. There's it's weird how similar they all are. And maybe there's a mirroring pattern recognition even with ourselves that Misbah and I look for people that mirror us, but they're all very mirrored amongst each other in terms of, and not saying that all of them are like, the home runs in our portfolio, but there is a sense of like, a low patience. Like you want to get things done because it's high drive. It's like people that want to just go out and do things and prove things wrong. And it's a sense of like, so those types of patterns you start to see when you've seen a lot of founders. You can start to tell who's good and who's not. And maybe there's other reasons that a business fails, but sometimes if it's the character of the founder, you can still kind of see that pattern and make a bet on that.
There's a saying that money changes people, right? Mm-hmm. When these founders that you describe with hustle, who've grown up here, have maybe had lives some had privilege, some had lives that were difficult. When they raise money, how does that change a founder? Because suddenly they've come into money. They see the money. Yes, the money is not for them.
I was going to say it's not
for them. Money. I know it's not. It's not their money, and B, it's not for them. It's for the business. But sometimes that gets murky in people's minds and things happen and money gets spent, wasted on things that...
I've definitely heard stories in this ecosystem, right? Of people that all of a sudden are like driving these like huge ass cars and all this stuff. And you're like, where did you get the money?
Exactly.
Buying like,
They're like, you gave it to me.
buying land, going on vacation.
Yeah.
Like, what is happening? Again, that comes down to picking. It's like integrity, right? It's like...
But have you seen people change in your experience? When they're written a check after that, let's say 3-6 months into it.
In our portfolio, no. And I'm not lying when I say that, because I do think that for us, it was like about betting on the founders that really cared about the problem that they were solving. And if you really truly saw that and you saw that they were going to do whatever it takes, first of all, they're not raising a ton of capital. Some of our companies have gone on to raise a lot of capital, but their vision was, and some of them are now raising a Series B. I think that because they wanted to achieve such big things, that money was in service to that. And I haven't personally seen it in our portfolio. I have heard those stories in the ecosystem for sure, where people really kind of confuse that. And obviously in that 2021 era where we saw that so much of that inflation come in, I saw, for me, what I didn't love, if we are speaking about what I didn't like and where I saw behavior change was a sense of entitlement when it came to their valuations, right? I was seeing like people raising off of, they had nothing that they'd built and they were like $20 million valuation.
Based on what?
Because based on nothing. Yeah. And you were just like, what are you raising this off of? But at the time, because there was so much FOMO in the market, people could do that. And it's making, there's that great, I don't know if you've seen that TV show, Silicon Valley. Mm-hmm. I always think it should be required watching for people because I'm like, watch that, because there was a moment in the show where once he raised at this insane valuation, where he's like sitting down and realizing he's like, oh my God, I have to make this company worth that. Right. And when I always say to people, it's like, it's not that you raise, it's like some sort of glamour that you've raised at this amount. It's like, how are you going to achieve that? Because you have to surpass that at the next round. Mm-hmm. So you don't want to enter an situation where you've had to now go out, you have to raise a down round, right? And raise lower than what you raised before. So I think I've seen that where it was like, we would speak to founders that were so entitled about it because they just saw so much money that was coming in. And it took a little bit, even as money dried up, for that to correct, right? Because I still saw deals where I was like, how are you thinking that this is okay, right? Because it's like, first of all, it's box fund, right? So creating a dollarized valuation when it's PKR and the currency devaluation is massive, it's like, how are you even justifying this? So it took a little bit for that to kind of course correct, but I think we're seeing that a little bit now.
Should valuations in this market be in PKR versus USD? And then you solve for USD afterwards based on the exchange rate?
I think it's a bit of I've seen, when we first invested in companies, this was before the whole co-legislation happened, right? Which the whole co-legislation that happened by the state bank in 2021 was a massive game changer for the ecosystem, right? Because all of a sudden founders could set up a holding company in the UAE, in Singapore, Delaware, and it became a lot easier for investors outside of box fund to put money into the market, right? And so I think that makes sense then to actually have and it's most of these founders at this early stage are raising off of safes anyway. So it's not pricing the company, it's just setting a cap, like a ceiling on how much the company is worth. And I do think dollar makes sense because it is for outside people to just digest it. I actually really like when I can see, the only thing I'll say is if you have a safe note and it's a PKR ceiling, which is fine. But if you're doing it for a holding company abroad and you're investing dollars and it's just the thing, but then report your revenue in PKR, right? Put everything kind of in the same in your deck is what I would say. So then it's kind of all along the same path versus reporting your revenue in dollars but having PKR. It's all that stuff to me doesn't really make sense. But I definitely see why people have been raising that because they're still going to outside investors, especially because right now there isn't a lot of local capital in the market.
Why is that? There is a lot of money in the local system. There's a lot of money that businesses have. There's a lot of cash that businesses are sitting on. Why is it that local businesses are not funding the startup space?
I just think it's a space that people don't understand, right? It's why would I put money into a startup where I have to park my money for a while. I may not see any sense of return on that investment for 7-10 years.
So they should invest in a fund that invests in startups because the fund should hopefully do it better.
The challenge is that, and this is what we faced, right? And a lot of other of our colleagues in this market faced is that there is a lot of liquidity here in Boxon locally, right? But then because of money not being abroad and most of us, because of the fund legislation, it's still quite onerous to set up a local fund here. And if you set up a local fund here, then and you're trying to raise money from abroad, because that's where most of the money is for these funds, getting it put into box fund is a whole thing. And so then you are trying to get these local businesses to then send money out, which you can't do. Mm-hmm. So there's a lot of conversations even now of like people setting up like mirrored entities here in Baksan and stuff like that. But I do think there was a lot of appetite by the next gen of these family offices a couple of years ago. And I think because if you think about like startup growth as like a J curve, right? We were kind of in that early part of the J going up when everything kind of dried up, right? And we had pretty big companies go belly up, right? Like the Airlifts, Tag, not all because of fraud, but because of running out of money like Airlift did, right? And so we never really had the opportunity to see any sense of realization of seeing any sort of actualization of like these companies that were going to then, if Airlift had an exit, right, or an acquisition by, another big quick commerce player, that would have then sold it to a lot of these local business players that were like, oh, wow, our money does come back to us, right? But because everything dried up and we had a series of pretty big flops, for better or worse, if we want to use that term, then all of a sudden people were like, why should I put my money into something where we don't even know if there's going to be an exit, right? And I think, so that goes back to your earlier question. It's like you have to invest in something that hasn't materialized yet. And so I think that's the challenge, is that we're still in that early part of the J curve, and Baksan never really got off to the races before everything kind of blew up, figuratively. But I think my hope is that, people we still have to find those believers. And I think with these family offices right now, it's hard for people to trust that it will do that. I hope there are people out there that do believe in it. But I feel like a lot of them really stopped believing when they were like, why should I put money into any of this when we've seen it not take off, right? So I think the challenge is that you still have diaspora money, people that are these, development finance institutions, people that do want to invest in emerging markets. And then I think there should be that appetite here, but you have to also educate those investors on how the cycle works, right? How the power law works in venture capital, all of that stuff. And so I think with investors like us, we all have to literally and figuratively build the road in front of us, right? Of like, this is what it looks like, but we also have to show them that there can be successes that happen but they have to invest in us first. So that's the challenge.
If you had to bet on a sector, what would you bet on?
Fintech.
Why?
Fintech and embedded finance, right? So, Angela Strange, who's this really big investor in the US, said this a couple of years ago, is that every company will eventually become a fintech. Financial services and fintech and financial products is going to be where, and especially in Baksan, right? It's a regulated industry, but a lot of the barriers to that industry really kind of lessened with some of the reforms that happened a couple of years ago. And so all of a sudden where, sort of some of the paid up capital like decreased, like how to get the license, like SECP doing a sandbox. Now State Bank is doing a sandbox. There's actually a lot of openness from the regulator to allow for innovation in the market, right? And so actually a lot of these fintechs are actually quite capital efficient. Some of, a lot of them, like, my most recent episode of my podcast was with Arif from Kisbazar. Kisbazar was a bit profitable on day one, right? It's a company that has been making money from day one, and you can make money quite fast, or you can become profitable quite fast in these spaces, and you are capital efficient. So I actually think that fintech will be where we see, the big success stories.
Fintech is a very broad definition. So yeah. Let's break that up. Like, what would you include as fintech, right? What does it encompass?
I mean, everything. So you have companies that are doing lending, SME financing, so SME lending. Obviously Abhi was doing earned wage access. You have savings. So we're investors in Iran that has Raast, but now has built like a gold product, which is doing, buying gold installments. So there's that. Obviously, what Kisbazar is doing is buy now, pay later, and they're doing it in a really interesting way in terms of really thinking about what products that people actually need. Then you have, so there's all this stuff in lending, there's saving, there's wealth, there's public markets, like people building products for that. There's, people now building in gold, and that's really interesting.
Supply chain financing,
SME finance, very interesting. And even to that point, right? It's like you have what I mentioned about embedded fintech is that we'll have companies of ours, like Truck It In, which is in the trucking space that eventually starts, and trucker is like this too in the market where then trucking financing becomes really interesting, right? In terms of what you're building. So it's an embedded layer of finance that you're layering into your company, or what Postex has been doing in the supply in like the logistics space in terms of financing. So there is like, even in every single sector, you can layer financial services or a financial product into what you're building. And so I think that to me is why that space is just, I think, hugely open. And when you look at other emerging markets, which was honestly the reason I built my podcast, was because I was so fascinated by the patterns in emerging markets and how similar they were to each other. Some of the best success stories in other emerging markets have been fintech success stories. And that's not to say that we haven't seen them in other spaces, but even in the B2B e-commerce space, as an example, omni retail that's operating in West Africa, they're building in the B2B e-commerce space, similar to what Bazaar is doing here, what Dodger, all Salesflow, all those players were doing, right? Their biggest piece now has been the financial layer that they've built in. And obviously here we've seen Bazaar acquired Kinu, right? And so we've seen that in terms of the fintech layer that they're building. So it becomes like, even if you're building not in the fintech space, you build in a financial service layer or financial product into your offering.
What do you think of micro lending, 5 to 25,000 rupee
Like
loans?
nano loans?
Yeah, like nano loans, actually.
I actually think that there is a lot more space for it now. I think we've seen really predatory lending in the past. So I think it's dependent on the terms and all of that. But I do think that there is an opportunity for it if you do it right. So there's always opportunities in everything. It's just about how you execute on it, how you're thinking about your user, how you're building for them, how it's actually about financial inclusion and not just being about being predatory. The reason we've seen, and this is just a commentary on like a space like buy now, pay later, right? Which in the US, as you know, probably like players like Affirm, Klarna, all Afterpay, it's really dedicated to a user that already had a credit profile, right? Like was part of the formal banking space. And then the challenge there sometimes is like people are just going, buying products that they can't afford and just eventually paying it off. And so it's an argument there. Here, I think buy now, pay later in emerging markets in the first wave didn't do well because people were just photocopying the Klarna model into Pakistan or into other markets and just building what they built. But the mindset here and what we're building for is so different. There's no credit infrastructure here, right? There's no data infrastructure to have credit profiles. Most people are unbanked or underbanked, right? So what, RF is doing with Kisbazaar is so cool is because of the way that they've thought about how they actually approve users for their product, right? And really thinking about it in a very relational sense, how they take data and build that algorithm in order to make those decisions, but then also thinking about it as like a tool for financial inclusion, because then you bring people into their system and then actually say that, maybe the first products that people buy are a fridge or a computer or a television, but eventually what they would then want to buy is something that's more aspirational once they can show that they can pay off those products, right? So I think it's really important to say that we're kind of in this stage in Pakistan where you can learn from other emerging markets and you can actually see the patterns, but also the playbooks that have emerged and what's worked and also what hasn't worked.
What would you say which market would you say Pakistan looks the most like?
I think all markets kind of look the similar to each other, but in different points. We're in different inflection points. So I think, and also cities, I think are more similar than markets. I think Lagos and Karachi are very similar. I think Cairo and Karachi are very similar because these are very concentrated cosmopolitan cities, where you have very a strong middle class, all of that. I think where India is today, Pakistan's way behind. But I think that there's a lot that we can learn, right? So DealCart is really similar to what City Mall is in India, but because we don't have the privilege, the DealCart hasn't had the same privilege to raise a ton of capital the way City Mall has. They actually reached conclusions a lot faster because they had to than City Mall that had the ability to take time and figure out what they were building. They took much longer to centralize their supply chain than DealCart. DealCart first had a decentralized supply chain because they were trying to reach a very SEC or really B consumer that was very conscious about prices, and then realized really quickly that if you want to actually be sustainable as a business, you have to centralize that supply chain, right? So they have one big warehouse. They realized that same day delivery was really terrible from a unit economic standpoint. Now they do next day delivery, right? Like all of these things that like how they make it make sense in the market. You can learn a lot faster because City Mall has had years to figure that out, and they can look at that, experiment, but we don't have the same privilege of a ton of capital to try things, make that decision a lot faster and pivot and iterate away from it. So I actually think that we can learn a lot from the Indian market. We can learn a lot from like what's been happening in Nigeria, what's been happening in Egypt. Brazil is like so fascinating to me. And I don't think we look at Latin America at all, honestly, sitting here in Box Sun and, doing that Brazil Box Sun episode on Buy Now, Pay Later was like so cool. Cause I was like, wow, RF, like just think about what you could do if you could leverage what Pagaleve has done in Brazil in terms of their decision engine, right? And like the ability to say that there's so much that is similar across emerging markets. And I say this as someone who's, my mother is Bangladeshi, my dad is Pakistani. I was born in Dubai. I lived in both places. Like I've kind of had that pan emerging market upbringing. So I've always thought like that. And I really want to bring that to how we think about things here in Pakistan.
You've also been a partner in your fund, right? Mm-hmm. And it's a partner, 2 women partners. So I'm not going to get into as much, what is it being like a woman in a partner?
Are you sure? Because everybody asks this.
I am not interested in that. I'm interested because I know you've answered that. But what I am interested in is what does it take to have a successful partnership in business?
That's such a good question. And we talk about this quite openly. I think number one, you have to have like respect for one another. I think that has to be the foundation. It's like when you're in a partnership with someone in a business, I mean, you know this, you have to it is a marriage in a lot of sense, right? And so if you're literally getting into a marriage with someone, you have to have a shared sense. First of all, you have to respect each other. You also have shared values, right? Of what is it that you're both looking to achieve. If your ship isn't in the same direction, you may have different desires in terms of how you do things and how you think about things, but your goal of where you're going is the same. And so with Misbah and I, like we've known each other for 15 years. Like we've known, and she was actually part of when I was building my original organization, Invest to Innovate. She was on my advisory board with that. She's seen it up close. We have such deep respect for one another. So even when things have been hard in what we've been building, that respect was always there. We've also worked on it. So similar to how I think the best marriages take work, we've had a coach that we've worked with together that we've actually made sure that we always align. Yeah. And I actually learned about it because there was a great podcast called How I Built This.
Guy Raz.
Yeah, Guy Raz's podcast.
This podcast is happening because of that podcast.
Really? I love that podcast. And I can see it, by the way, with how your vibe as well. I loved the episode with the Soul Cycle founders because and this is where this came from. They talked about it because they were like, it's to assume that just because you're co-founders that really respect each other is enough because you have different life experiences. The way you think about, and then for Misbah and I, the way that we think about risk is different because we've had different life experiences and how we've witnessed risk, even with our own families, right? So when it comes to decisions, like we're very different in how we think and look at things. So having a coach, which the Soul Cycle founders said, there's like getting a coach was the best thing that they ever did. And I was like, oh, should we get a coach? Like, even if there's nothing fundamentally wrong, maybe that's something that we should do to make sure that we're aligned. It made me really respect because I always say about this with Misbah and I always use this analogy. I'm like, if we were jumping out of a plane, I would jump without even thinking if there was a parachute. I was like, just go. That's my vibe. I've always been like that. You've known me forever, but it's like, I've always been like, just go. And let's worry about, if there's a parachute later. Misbah will ask a million questions, safety questions. Is there a parachute? She'll and we always say that, and this is where coming to working on our relationship and also like really coming to respect where the other was coming from is that it's really easy when things are hard to really resent the other person being like, oh, she just wants to just go all the time. And we have to do, and I'll be like, she just wants to ask a million questions. Can we just go? Right. But we always say this, that if I didn't have her, I might have jumped and there was no parachute and I would have broken all the bones in my body. she would have, if she didn't have me, the plane would have landed by the time her questions were done. So we need each other to really be able to come into the middle. And then as a result, like even when we look at a deal, we never take a deal to our investment committee unless both of us are 100% conviction on the deal, which means that it takes time, right? For both of us to really make sure that the other person feels comfortable. And I think that sense of respect for one another, of also what we bring to the table, I think is something that it takes work, but also because we have that shared sense of respect and trust in one another, I wouldn't do this with anyone else, right? Like, and we say that really openly to people about, even as we're thinking about now our next fund, if I would never do a second fund if Misbah didn't want to do it, because, and she was the same. We would have to do it together. And it's not always perfect, obviously still, but like, I think like I just really, truly, truly love and respect her. So
How do you have difficult conversations?
I think like, and maybe this is gendered in being a woman, I don't know, but I personally am very good with difficult conversations. I'm not confrontational, and
Do you originate the conversation?
both of us do.
Okay.
And actually sometimes like, cause I can be a bit conflict avoidant, and I'll just be like, let's just move on because I want to move fast. She's actually really good about like, let's sit down and have this conversation. Let's talk about it, and vice versa. So now both of us are really good about like just making sure that like, are we okay? Like, let's talk about stuff. Because sometimes in this world of what we're living in, things move so fast that you don't have the time to sit down and even celebrate, honestly. Like when we closed our fund, we were like, let's take a minute to like pat ourselves on the back, like we did it, but we had to literally get back out and like just start working again, right? And so yeah, I think both of us are quite good. That's also how I show up in life, is my husband and I have difficult conversations when we're, being in, it's the same, the way you are in a partnership is the way you are in your marriage, right? And so that's how him and I show up. It's how I'm sure she might, but for us as in our business partnership, that's definitely how we make sure that we talk through things.
You're going to be part of a conference tomorrow. What are you hoping to see and like throughout the conference that is different from all of the conferences you've been to in Karachi or in Pakistan in the last few years?
I mean, so I didn't want to come to the conference and, if I was asked to do a talk, I didn't want to do the same talk that I always did. And I'm really lucky that a friend of mine, who's a co-investor as well, but we're also part of this fellowship called Kaufman together. He's from Egypt. He's actually coming to Pakistan tomorrow so this will come out probably after the conference, but I hope people get to meet him. He's Egyptian. He's been a major part of the Egyptian startup space and started investing in Nigeria. Now he's investing in the GCC and also Pakistan. We're co-investors in Metric, in our portfolio. So I was really excited because he was really interested to come to Pakistan, because he was like, I've never been, I really want to go. I'm like, come to this conference. And then let's do, and then I literally said, if I'm doing this conference, I want to do a talk that people haven't heard. And I wanted Ali and I to do a conversation about Pakistan, Egypt, Nigeria. Let's talk about emerging markets. And that was what I wanted for myself. I was like, I want to have a conversation that's a little bit different, because I'm tired and I'm bored of hearing myself say the same things over and over again. I really love in a lot of these conferences seeing so many things around the creator economy right now in Pakistan, because there are so many amazing creators. And some of my favorite talks actually at Disrupt over the years has been about music, the music industry. It's been about the creator economy. And I actually think that has been, as someone who hears the startup stuff all the time, I was like, that to me is quite interesting and unique and new. And then I think what I personally really love from these conferences, and especially Disrupt, because I think Jahanara is so good at like bringing people together. I really love the serendipitous moments that happen of when you just meet someone that you just haven't seen in a while, and like what you get to have as a result of a conversation, right? So I'm actually excited about the serendipitous connections that come out of it that I can't predict. But because I know it's going to be a good crowd there, I always go to Disrupt. It's actually the only conference that I make a trip for. I time my trips to Karachi for Disrupt. And the reason is because I really know that there's a lot of value that I get out of just being in a room of people that are also really smart and committed and thoughtful.
Very cool. No, I'm happy to hear that there's still people that are betting on Pakistan, especially in the startup space, because it has been through its ups and downs, and the market has a lot of potential. Yes, it's not the 260 million that everyone quotes. It is maybe a population of 20 to 40 million people who can spend money, who have liquidity, but then there's an entire unbanked if you really focus on the fintech stuff. But structurally, there are major challenges. Like it's not a market for the faint of heart. It's not a market for a 5-year punt or even a 3-year punt. This is a decade at least before you see some real value creation. And I think that most people who invest or are founding a business who don't do it with at least a decade-long horizon are going to get frustrated and exit. And that, I think, is the biggest challenge, is that when anyone comes into this market, they need to forget about it. It's kind of like Bitcoin. Just buy it and forget about it.
Yeah, what's it called? HODL? Hold and don't let go.
Yeah, exactly. Because you have to believe in the fundamental thesis, though.
Yes.
You have to research the fundamental thesis. And as long as you've understood the thesis, just buy, and it's for the next generation.
Yeah.
And along the way, you really, like you said, I think what you said was, what most founders miss, and maybe most investors miss, is find people who really enjoy solving the problem. Like that's what drives them. Yeah. None of the fancy offices and the titles and the talks and the speaking and all of that stuff. That's not it. That's not founding a business. It is going in, showing up every day and finding a way to do it 1% better.
Yeah. And having that growth mindset, right?
And having that mindset.
One thing I love about all of our founders, but I'm going to specifically call out Omer Ansari from Abhi about this. Omer is like, I never know how he has so many hours in a day. Like, he is constantly reading and listening and like doing stuff and going here, but he's doing it all in service to becoming better. And I remember thinking that when I first met him, I was like, he's someone that I really vibed. I mean, I vibe with all of our founders. And I think that's something that I have in common with so many of them, is like, you have to have that growth mindset. You have to be like, because if you looked at, and I thought about this when I built Invest Innovate first, right? As an ecosystem builder, if I looked at my peers, we would only ever be here because we don't know what good looks like, right? But I remember when we were building our first accelerator program, we ran a first cycle and then I scrapped it because I was like, it's okay. And I actually spoke to someone who is building something similar in Brazil. I spoke to someone who is building something in Norway about their incubators. And I was like, tell me what good looks like, right? And I think we did that every year where we're like, level up. Like, you have to constantly challenge yourself. Even now as an investor, like, this year has been a year for me because we just were like, we could have just, everyone in the VC cycle is always saying like, go out and raise your second fund, go out immediately and do it, right? As soon as you close fund one, go out and raise fund two. Not only were we exhausted, but we were like, let's take a minute, right? Like, let's figure out, like, do we want to raise a fund two? Like, and if we do raise that fund too, what does it look like for the realities at Box Fund? And taking that space and that time this year for me has been one of truly, like, that's been my theme of this year, has been learning. Right. And I got into this amazing fellowship called the Kaufman Fellowship, which is all the top venture capital investors in the world have been part of it in one point or another. I did this like program and, because of the IFC in Oxford this year, I started a podcast because I wanted to learn. Right. And like, you have to have that sense of like, for me as an investor, I have to have that sense. And if I want to invest in founders, they also have to have that growth mindset of like, I'm so obsessed with the problem, but I'm also not just looking at my peers. I'm constantly thinking about like, what is that level that I want to achieve and how do I continue to level up from there? And I think that's really important.
This has been a great conversation, Kulsoom. Thank you so much for coming out. I know it's you come out not as often as you can or should, but the fact that you continue to support the local ecosystem and you have faith, more importantly, you have faith in the local startup system, I think speaks volumes to sort of your commitment to this market. And I think that, yes, there are structural issues, but if you're taking a long play, this market is going to give exponential returns.
Inshallah.
And I wish you all the best on those. Don't use it the way they use it.
I know, I can't use it. Like, inshallah, we will soon be landing. I'm like, what?
But thanks a lot. Best of luck tomorrow.
Thank you.
And hopefully we will see you soon. Thank you. Thank you. And thank you for tuning into DigiTales. Like, subscribe, comment, and we'll see you next week.